Hello, this is Maj Suedan from Geo Investing, and today I am bringing you our first video case study. And this is going to be a series we're going to keep doing here. Geo Investing was founded in 2007. We started publishing ideas mainly in 2008. So it's been many years that we've been bringing a lot of coverage to our subscribers here at Geo Investing, our premium subscribers. And we thought it'd be a good idea, since we've covered over 1,500 equities over these years, to start really going in and doing some case studies to help our subscribers and help you. You've agreed to be on our email list and follow us. And I thank you for that, to understand what we're doing here and maybe learn from us or maybe improve your investment process. So these case studies should be really awesome. And I want to start off on RWWI, facing the OTC RWWI. It's our first case study in a video format, and it's really one of my favorite multi-baggers. And we're going to get into that in a second. And let's get to the disclaimers. Just wants to let you all know here that by viewing this case study presentation, you agree to our terms and conditions that are here in front of you on this presentation. You can also go to our website at geoinvesting.com. We're not financial advisors. Please seek your own investment advice if you want that, or if you're your own financial advisor. We're offering our opinion here. By viewing this presentation, you agree to the terms and conditions, whether you're viewing this through video or listening to it without the video. So let's take a look at this multi-bagger at a glance here, RWWI. The stock right now currently trades at $22.25. Now, I have a long-term chart here from 2010, even though we started covering it at Geo Investing in 2019. But I thought this was a really cool chart to look at here too. It'll become more relevant as we go through this case study. We kind of picked that 2019 point as an entry level in the profile on Geo for a reason. Now, so if you would invest $5,000 December of 2010, we took an average price of maybe 53 cents there during December, which is the 9,434 shares. That'd be worth $209,905 today, $209,105, which equates to a total return of 4,098%, or a compounded average annual return of 33%. Now that's really awesome in itself, but on top of that, you would have also pocketed over $40,000 in dividends, assuming you didn't reinvest it, obviously, easily covering your initial investment by 8x pre-tax. So that's really awesome. And I think just seeing that puts everything here in perspective, how well the stock is done. And this is an OTC company, doesn't put out press releases, doesn't go to conferences. This is one of the few companies I wasn't able to ever interview the management, but I still thought it was interesting. We'll get into that reasons why in a second here. So as I said earlier, we published our bullish thesis on RWWI to Geo Investing premium subscribers on February 8th, 2019 at $3.70. Today the stock's at $22.25. It did recently hit a high of $25. This equates to a total return of 508%. So we captured some of that return from 2019 on. Today, annual revenues are tracking at $336 million, an increase of 51% versus June 30, 2019. Annual earnings per share are tracking at $1.80 a share, an increase of 374% since then. The market cap right now is $709 million. Still a small cap. The stock is no longer a micro cap. So the outline on this case study includes the following. First, I'm going to go over what the big cap micro theme is. We also call it big cap, micro cap. And these are companies with substantial revenue trading as a micro cap. We're going to get into what that means and some more stats on that. And then I want to cover 3 multi-bagger traits that this kind of story had. Industry, and we have about, I think it's 8 multi-bagger traits. We highlight, well, there's many more, but there's about 8 or 9 we really like a lot. One of them is, looking at industry trends. And in this situation, trends that were going on, we're creating a moat for RWWI that was really hard for smaller competitors to kind of penetrate. Wallet share gains were becoming evident, where the company was being able to generate more revenue from its current customers. And operating leverage, which is really what really took this thing off and made it a multi-bagger. I think that was the key multi-bagger trait here. And that's where earnings are growing faster than revenue. Said another way, it's when your revenue is growing faster than your operating expenses. So let's talk about what a big cap, micro cap is. These are real companies. These are micro caps with real revenue and profits. And there's this assumption out there that Microcap and nano cap companies are these development stage companies with no revenue and no earnings. That could be further from the truth. There is a nice piece of that universe in the microcap area that are these real companies that have a lot of history. There's, for example, if you look at just the US market, we didn't do Canada for the statistic here, out of roughly 4,500 US microcap stocks, 961 have annual revenues larger than 50 million. 653 stocks have larger revenue than 100 million. Another 355 have revenue of over 250 million, and another 175 have revenue over 500 million. So that tells you that's a nice little kind of hunting ground to be kind of searching for some of these companies. And we like this right now because we think right now is really the time for these type of companies to shine. Coming out of 2022, out of it may be a 10 to 15 year bull market where growth stocks are going up, quality didn't matter as much, really, earnings didn't matter as much. What mattered most was growing your revenue. But now we have higher rates, inflation concerns. Now quality means something. When you're looking at the nano cap and microcap area, these big cap, microcap stocks are going to be where a lot of the money is going to go to because they might be perceived as a little less riskier than some of the speculative stuff. I will do another case study on that one day where I see this playing out masterfully right now. I've been running a strategy for about 1.5 years now, and it's crushing the indexes, but that's the cliffhanger for you. So when you look at RWWI, it's one of the world's largest providers of technology solutions and professional services to organizations with engineering, design, and information technology needs. I can go on and on. Really, in a nutshell, they provide kind of engineering software, and they're a reseller. They're actually a value-added reseller. I'm going to get to what that means in a second, but that's a really important part of the story, the value-added piece of it. And so they basically go to work with other companies like Autodesk or other kind of engineering, software engineering companies, go sell their software, like Autodesk, to other customers. And the value-added part means they add pieces, their own pieces to the puzzle too. They have their own software solutions. That's what the value-added reseller means. So the company's been around for 40 years. Its going public history began, I think, in October 1996. It's the leading reseller now of Autodesk products. Autodesk, by the way, is a multi-billion-dollar company. So this is a nano-cap company, with servicing $1 billion customer. Actually, it's actually topping $4 billion. I have it here. The RWWI employs over 400 people in 35 locations across North America. It's served over 25,000 customers. Real revenues, real profits. The company was doing 9.5 million in revenue in 1996. Now today, actually, it's closing in on 400 million. Annual earnings are on track for $65 million. They have distributed over, I think, $130 million in dividends since 2019. So you have a situation here where a company is growing its revenue, growing its earnings, and rewarding its shareholder with dividends. Pretty amazing. So I think this kind of really helps you understand that this is a really, significant company, been around for a long time. This is not a development stage company that many people associate with OTC, nano cap and microcap type of companies. So if you look at this little this chart here I have here, or this representation, I put this together to show you some of our favorite multi-bagger traits that we look for at GeoInvesting. And this kind of list was kind of developed over my 30-year investing career, or 30 plus now. I'm getting old, and also through my years with GeoInvesting as I expanded my strategies. And this is a piece of some of our multi-bagger lists. We have a lot more other factors too, but these are kind of our top 8 that we like over here. Increasing wallet share, which means getting more revenue for your current customers. Strong operating leverage, growing your earnings faster than their revenue. Maybe niche markets. We like companies that are serving smaller markets that other competitors don't want to get into because they're too small. Early stages of a margin expansion cycle, that kind of plays into the operating leverage piece of it there. We like companies that have a recurring revenue model, or maybe are shifting to it. Companies that are improving their balance sheet or the capital structure. When we're looking at market trends, we like to see if the company is going to be benefiting from certain trends going on in the industry. And of course, acquisitions that synergize and accelerate growth. Some of these will work together, even though I have a box tree here for RWWI. The other ones may apply a little bit because they have made acquisitions actually, but I didn't put that in this one because it wasn't really the main driver. The company had already made a lot of acquisitions, before coming into 2019 during our coverage. So let's go here. Let's talk about the industry changes creating a moat. I'm going to say the best for last, which is the operating leverage. This is my favorite. But you have here, so what was going on here was that there was a lot of resellers out there, selling, reselling software engineering companies, software companies. And, it was just getting really, really intense. And it got to a point where a lot of these larger players like Autodesk wanted to really start capturing more market share quicker. So they decided really, hey, we better start figuring out how we're going to do that. And one of those solutions was really relying on some of the better resellers out there. And we were reading about that, learning about that trend. It was really accelerating at the time that we kind of came across RWWI. And RWWI was already a leading reseller of Autodesk software. So it made sense that Autodesk was going to rely more on RWWI. And then we found this quote actually in some of the verbiage of Autodesk. We went, it's a public company. It trades under ADSK, and we read a lot of SEC filings. So when we're researching a company, we don't only look at the filings of the company we're researching. In this case, RWWI wasn't putting filings on the SEC anymore. They're doing stuff on the OTC markets.com. We also research some of the SEC filings of competitors or customers. Autodesk is a public company. And we found some information that basically confirmed what we found going on in the industry. Here the quote is, importantly, we, Autodesk, expect our indirect channels, which are resellers, will continue to transact and support the majority of our future revenue. So that really solidified our opinion that RWWI was going to basically benefit from this trend. And basically what's going to happen here too, which was a benefit for RWWI, was that as this is going on, a lot of smaller firms are either going to die or get acquired. And we had looked back at RWWI's history and found that they have a great track record of acquiring companies. So we figured that they were going to go out there, maybe start acquiring small companies, which they're doing, to try and increase their moat. So this was really going to make it hard for smaller, resellers to compete with RWWI. So basically, it's solidifying RWWI's position in the market as well as its relationship with Autodesk. And that kind of takes us into wallet share gains. You're getting more revenue from current customers. So not only does these industry changes really helped to maybe solidify RWWI standing with Autodesk, which means more revenue from that relationship. That's kind of a wallet share kind of situation. But furthermore, because of what was going on here, Autodesk changed its business model a little bit along the way. I'm not going to get into that, but they went to more of a recurring revenue model, and part of that meant that they were kind of forcing their customers to really adopt this new model. And in doing that, we assumed that, and I think correctly, that RWWI was going to play a big role in contacting these customers to help them kind of onboard a new model and convince them to do this. So that was developing really a nice relationship with that customer funnel that they might have already had a relationship with, but now even stronger. Even more importantly, too, so remember, let's take back to a second. I said RWWI is a value-added reseller. So what does that mean? That means that as RWWI gets better at producing software tools that work with Autodesk, for example, or work with the needs of the customers, it can upsell its software tools to these customers. That's what value-added means. A regular reseller doesn't have any other tools to offer a customer. So basically, if a RWWI signs up a customer to Autodesk, or that relationship gets tighter, now it gives RWWI a chance to basically sell their own stuff to these customers. So that was really, really awesome. So it's all coming together. But here's really what we liked a lot here. So all that stuff is good and dandy, right? But what we noticed with the company's history, and that chart I showed you earlier, where the chart was flat from like 2010 to 2019, and it spiked up. We had seen that, and we thought, well, okay, these guys are strong. They're kind of growing revenue, but their earnings weren't really accelerating that fast. And that's why the chart was so flat for a while. But what we saw was a trend here. We saw that, and this chart shows that the orange is the basically operating expenses for the company, and the blue bar is the revenue. And as you see, you saw this like trend where revenues are starting to go up and expenses were laying flat. Now, you wouldn't have seen really that relationship in the prior to 2017 or so. But we saw really, when we look at this chart, we saw the revenue growth really starting to accelerate in 18. So we figured that earnings were really going to start accelerating very quickly because revenues were starting to go in a ramp-up mode. So when you have that, the company really had put this, probably spent a lot of money before 2017 and for many, many years, growing the business, maybe investing in technology, maybe making acquisitions. Who knows what they were doing, but they got to a point where they were able to finally start growing without growing their expenses that much. And that's just basically probably my number one multi-bagger I look for. It's like if I could find a company when it's about to inflect in its operating leverage, that's fantastic. And that's a big thing of what we try and do at Geo. And you find a lot of those opportunities in these kind of big cap, micro cap stocks. They've been around for a long time. And they find new ways to grow. They have their expenses probably in line. If they can find some way to grow their revenue into existing markets, because they already have reputation, you can see growth and earnings per share really accelerate. And that's what we had here. So that's why the stock really, since 2019, we just got lucky to found at the right time. I've been watching this stock for many years, but it was always expensive in terms of its PE ratio. But when I saw this kind of trend, I said, okay, the earnings are going to go up, and eventually the valuation is going to be cheap. And that's indeed what had happened. Here's another chart kind of depicts some of this. So here we found the stock in 2019, as you see here. At that time, revenues were 116 million. Earnings per share were 8 cents. Operating margin was about 3.6%. Now you look at today. Actually, this number here is basically for their last annual report for 2022, and revenues were 306 million. EPS was $1.14, and operating margin 15.26%. And as I showed you earlier today, that earnings per share is even growing at a much faster rate now, annual run rate than even this number shows, about 14. So they're really starting to accelerate their earnings per share growth. There is one thing I do want to talk about here really quick, though, is that operating leverage is great, but if your sales start declining, you can imagine what could happen there. If you have a flat expense kind of model, then that means that when your revenues fall, and if your expenses aren't falling at the same time, you can see accelerated losses too. So I want you to keep that in mind also when if you're looking for companies like this. That's why I love the operating leverage really in a recurring revenue model, because you have more predictability in revenue and less of a chance of it falling off, hopefully. So that's really it, a really quick case study on what we have here. The RWWI debunks all the negative stereotypes out there. Microcap stocks, give Main Street investors an edge. The financial media keeps spreading negative messages, which results in Main Street investors like you and me being misinformed. They tell you that all these smaller companies, actually small cap companies, microcap companies, have minimal revenue and earnings. We just showed you RWI says, no, you don't. And that there are some of us have revenue out there and earnings. They tell you, the financial media will tell you not to invest in them, these kind of stocks, maybe because institutions can't invest in them. And so that's the narrative they want to play. There's also been a lot of, smaller companies that probably haven't done well, or maybe, there's been fraud. But there's also fraudulent companies and big cap companies too, like Enron and these kind of things. So you'll hear about they're too illiquid. Well, you know what? Here's my kind of answer to is that a stock is too illiquid. When you're right, you don't have to worry about liquidity. It's when you're wrong. And when you're wrong, I don't care if it's a small cap, nano cap, a micro cap, or a big cap. When you're wrong, you're going to go down. And when you're right, your investment's going to go up. So really, it's our responsibility as investors to find great companies, even at any market cap, really, because if you're wrong, the stock's going to go down, and liquidity isn't going to save you when that happens. And that'll actually be another great cliffhanger case study to show you a lot of large cap companies, how they've gotten crushed over time when they've had bad, just bad earnings reports, down 50% in one day. But overall, there's about 20,000 stocks in North America. That's including U.S. and Canada, and 10,000 of them being microcaps. And we hunt in both areas right now to find these big cap, microcap ideas. And by the way, I should throw this out there too. Everyone thinks Canada is all these mining companies and development stage companies. There's a lot of legitimate companies in Canada. It took me years to accept that fact and not play into the negative stereotypes about Canada. Trust me on that. And we're starting to find a lot of those at Geo Investing right now. They're doing really well. But don't take our word for it. Let's look at companies. Our legends like Warren Buffett, and Joel Green, Peter Lynch, and Joel Greenblatt. Warren Buffett has said, Warren Buffett made 50% plus returns on microcaps in the 1950s for his own account. Here's a Peter Lynch quote. Over time, it's been more profitable to invest in small companies than in large companies. The successful small companies of today will become the Walmarts, Home Depots, and Microsofts of tomorrow. And then Joel Greenblatt, investing in small stocks still has some major advantages over investing in larger cap companies. These stocks, because of their smaller size, are subject to less research from both institutional and individual investors. That means you have less people looking at these companies, less competition, and that means you have a chance to find great companies before other people and other investors find them. Let's come back to Warren Buffett. I do think if you're working with very small amounts of money, not like billions of dollars like Warren, that there are almost always some significant inefficiencies in some place. When I started out, I went through all of the Moody's manuals, page by page. There were many things that popped out, and none of them were in any brokerage report of any sort. They were just plain overlooked. And that's great, a great quote there. So these smaller companies are just not monitored, not looked at by people. We can't listen to if you take your narrative about why not to invest in these smaller companies from the financial media or large hedge funds, because they can't invest in these. And they're not going to earn their fees. But we're not in the same position as those type of investors and institutions. We can invest in these small companies and really have great success and kind of have transformational kind of effects on our portfolio. So, you'll hear me talk a lot about how good I think we are at what we do. We have a great track record, which we can talk about another time. But I got this recent kind of testimonial from a CEO of a company, and I think this is the best way to kind of express how proud I am of what GeoInvesting has done over the years in our team. So most websites will put the testimonials of their investors on their website, which we have them. But it's great when we get a testimonial from the CEO. And we hold these fireside chats, we call them skull sessions actually, with management teams to learn more about them and their premium events for our members. And it takes you through our interview process. It's a very deep dive. And these companies don't pay to be on these events. It's totally a invite-only kind of event. And we also record these events so you can look at them later. But Vincent Kelly, he's the CEO and president of Spoke Holdings, SPOK. This is a $100 million company. They provide communication solutions for healthcare industry, mainly hospitals. And we interviewed them live for our premium subscribers. And he basically talked about how he loved the event. And here's his quote: "Obviously, you've done your homework, and that's a breath of fresh air. Sometimes you get on these calls and folks don't even know anything about the company, and you've obviously spent a lot of time looking at it." So I don't know how many other newsletter or investment sites can kind of have these quotes for you, but this is just one of many that we have, and this really made us feel really, really good when we saw this, and really motivates us to keep doing what we're doing. If you continue on this why invest in nano cap companies, the empirical evidence alone basically proves that over a long period of time that the smallest sub part of the microcap universe beats the larger return large cap stocks by about 8.24% a year. What we do at Geo, we kind of take that edge, we combine it with our own research to get even more alpha for our premium members. We've identified over 200 multibaggers over since Geo was started publishing its research. Our coverage encompasses over 1,500 companies that we cover, about over 1,900 spotlight research notes, 2,700 email bulletins. We send out morning emails to our members every morning, keeping you abreast of what we're doing. We've published over 200 articles and over 200 plus management interview and investor video and clips from events we've hosted. We go the extra mile actually and take these management videos and investor videos, and we clip them and make a story and journey out of it for you to be able to kind of maybe skip around and see what you want to read the most, or choose that at least. Let's get back to some testimonials from our premium subscribers now. This first one I wanted to bring up to you because it just says if you have, as anything, if you have one good pick, you can pay for your subscription. And here's one subscriber call testimonial we got not too long, a few years ago actually. Great call. Made enough money on Lakeland Industries to buy 10 years worth of GeoInvesting subscriptions. For the second consecutive time, I have made a return on a stock pick by GeoInvesting to cover my subscription costs several fold. Thanks. And then we go this one. This comes from a one-time fund manager, and now he's developing a software product. GeoInvesting is the most valuable microcap research service available today. Their breadth of coverage when considering depth of analysis is the most expansive we have yet to encounter. Their coverage focuses on actionable ideas. Their analysis includes considerations of timing, and most importantly, their thesis and corresponding ground support of their views. And they are transparent with respect to their own positions and the names they cover. GeoInvesting's principal, Maj Swaydan, I forgot that was there, I'm sorry, is one of the best microcap investors in the equity markets today. Well, there's many great microcap investors. If you take a look, real quick, a snapshot of what we offer here, you're going to get new stocks ideas. We're not just a stock picking firm, by the way. We are a platform. People will confuse us sometimes, but because there's so many stock picking websites out there, we back everything up by in-depth research. We also get stock picks from our premium subscriber investor network. These are people who are subscribers to Geo that also pitch their ideas to us. We find information well ahead of the crowd. So that gives you a competitive advantage. We call that information arbitrage. You get your day started emails right to your inbox. We have 15 years of archive research on over 1,500 companies, and we're increasing that every day. You get access to our live and archive CEO interviews, by the way, as well as investor interviews too. We get a weekly newsletter, which basically, in case we're busy during the week, we wrap it all up every Sunday, so you can get kind of what will happen at Geo and maybe what we're looking at. Every month we do what we call the open forum, which I go over the whole month on a live video, and we also record that if you were not able to attend. I go through a whole coverage universe and talk about what's going on, just in case you missed a lot of our updates and alerts during the month. And of course, we really pride ourselves in educating our subscriber base and let them know what we're learning. I'm still learning every day and about our investment process, and now these case study videos. So really proud of what we can offer you in this platform. So we do offer a 7-day free trial. You can the link here is in this presentation. You can just go to geoinvesting.com and you'll see a button there that says free trial, and you can just go and take a 7-day free trial. We have annual, biannual, and quarterly memberships. So basically you can find out what works for you. You can also send us a message anytime you want with any kind of question, or you can request a one-on-one call with me, and I'll discuss our platform as well as our investment strategies. I love talking stocks, love talking shop at any level, beginner, intermediate, or advanced. Those calls go really, really well. And I think if you do book a call with me, you're going to want to probably join Geo. I think you're going to like what we're doing. It's a lot easier when you see the platform than you hear me talk about it. You can just the links are over here. You can go to the bottom of any of our pages. I think we have a contact form there. The links here too, though. You can email us at support@geoinvesting.com. So thank you very much for taking the time to watch this video. Hopefully we'll have many more of these coming at you really soon, and talk to you soon. Hopefully we'll see you as a GeoInvesting subscriber soon.